Ladies and gentlemen, K Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 2.2% there. On the S&P Nasdaq, 3.7%. Semiconductor, 5.3%. Dow, 1.5%. Also, 3.1%. Transport made a move, 4% positive for the day. Banks up 3%. Energy slightly red there. Biotech made a move, 4% positive. Healthcare, 1.2%. Home builders, 2.1%. Utilities pretty much flat, retail up 4%. Emerging market is up 8% today with all the China names are up quite a bit today. Bitcoin up 4%. Gold, silver, miners up a little bit. Dollar down, oil down, treasury bonds slightly up. VIX is down by 11% there. Let's stick with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed on yesterday, on Tuesday. And this is where we opened up today, this morning. So we actually saw a pretty decent size gap up and the follow through on that first hour. And then on the second and third, we're stalling a bit just because my midterm moving average was in that vicinity. You can see right here, right? That level did act as strong resistance back in early March. Bulls are aware of that because last time when we did not able to break above it, market tanked for entire week. So when we made a move today, you can see that jittery action, the nervousness, the uncertainty, and the fear came in. And then actually what happened was on the fifth hour, actually, that up gap was quickly filled. You can see that upper, lower wick here, right? So it's very interesting how quickly market got. First of all, though, my micro-term moving average and the short-term moving average, you can see that my micro-term moving average right here, resistance, 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 and the support. You can see my micro-term resistance, resistance, and the support. So prior resistance acting as support, action happening with my micro term and the short term, and that's a good sign. It would have been better if the bulls were able to keep that gap open, but I think bulls dodged a bullet here because if that gap would have been filled, and then if bulls were not able to make them, because you can see right here, there was a down gap right here, or up gap actually right here. That up gap was filled, and then you can see how it never recovered. We stayed there. This is what happened next day. We slightly gapped down, and tankage continued for 2 straight days. So once that gap got filled, and then what happened was I think a lot of longs kind of chased long here. They placed their stuff just underneath that gap area, and so a whole lot of gaps were taken out. But once that gap got filled, it did act as instant support. Because same thing happened here. You can see that it did act as instant support for 3 hours or so. But then inevitably, being below my short-term moving average, tankage came. A little bit of different scenario. You can see when this thing did see that tankage, on that fifth hour, my short term and the micro term moving averages were there to support the buyers. But I wasn't sure. I actually was watching. I wasn't sure how strong of support it's gonna be. But when this thing quickly bounced, and then we did see that hammer candle there, and we did see that follow through and shaved top here. Very, very strong close, and bulls are probably getting very, very excited. However, if I kind of zoom out here a little bit, as you can see, this is the vicinity, a dangerous vicinity for the buyers. Given the fact that here, you can see, this is the impressive resume guy supporting the bears for this entire year in the last couple months. You can see right here, right there was a little attempt to make a move. Tankage came, got back up, came down. Bulls tried it one more time, tankage, came. Bulls tried another time here early March, tankage came. And this is how many times? 1, 2, 3, 4. There's about 5th time bulls are trying to reclaim and break above my midterm moving average here, right? This level is extremely important level for both bulls and bears. First of all, it is important level for the bears because if bears lose this level, bulls will go wild and they will go up and fill this gap. Mark my words, if the bulls can break above this midterm moving average and stay above it, right? Bulls will find a way because bulls are starting to get a little bit of confidence right here because you can see bears failed to make lower low. What is this? That's a lower low. What is that? The low, lower low, lower low. What is this? High, high, lower high, lower high. Those are called cultivation of downtrend. What happened was though, this is kind of a higher low here slightly because that low is definitely higher than this low. So what bulls are going after is this swing high right here and this gap. And at the same time, we have this midterm moving average coming down, but we're not seeing any kind of jittery, uncertainty, fearful candle in that vicinity. We did see that earlier today all day long, but on that last hour, seems like bulls' demeanor has changed a little bit. You can see some of these candles. It tells us something right here. See that candle, that doji, that upper tail, that, dark cloud cover, red candle, right? And at this time is a little bit different because you can see my short term and the micro term moving average, the trajectory of both of those moving averages are almost like a waterfall supporting the bears. Right now, the micro term and the short term moving averages, at least what we witnessed on that 5th hour, is supporting the buyers. Plus, we have that last candle looking pretty confident, pretty strong to close the day. So I'm going to tell you what bears need to do because of this candle we have right now. Bears need to kill this momentum by gapping down. If you can gap it down right about here, 432, if bears can gap this down to about 432 tomorrow morning, this is non-event. And then you will open a down gap, and then bull bears can make a way to come down and fill this gap, right? If they can break about 429 though, because that's that 429. I really got, this video might get a little longer because I gotta kind of, make up for all the days that I've missed. So I'm trying to cover everything here. So stay with me. So you can see 430 is the prior resistance acting as support right here. So that's an important level. So not only bears need to gap below 432 to kill this momentum and then gap below and close the day below 430 to get this midterm moving average continue to curl down and then go after the down gap. However, if we do see a continuation to the upside tomorrow, and if the price gets above my midterm moving average for the first time since early February / late January, bulls will go wild and they will smell blood and go after this down gap that was opened up back in February 17th. It's been a while since bulls found any kind of traction because we're in this midterm downtrend. Very, very quickly, these moves were dismantled. You can see moves, tanked, moves, tanked. So you got another move here. So if the bulls can actually break above this swing high and go up and fill this gap, cultivate that higher high, pull back, use that, and then you see that midterm moving average, kind of utilize that as new support because that impressive resume guy, this midterm moving average is a solid moving average because It's a pivotal moving average. So there's a good, this moving average is very strong because it's been acting as resistance this entire time, this entire year. So can you imagine if this moving average decided it's gonna now support the bulls? Can you imagine how much bulls can utilize? Because this is already a strong moving average. How much you can utilize and find a way to make a move to the upside. So tomorrow is gonna be very, very important day. Let's check out that oscillator and see if we can extract any more information. So this is what I like to call coiling setup on the oscillator. So you can see this oscillator has been coiling up and down, right? Because you see how it doesn't quite like get up there, oscillate back and forth. What it does is kind of gets, you know, this little smaller oscillation. Like it doesn't get the full oscillation, right? It goes up all the way up, all the way down, all the way up, all the way down, all the way. But what it does is it kind of goes up, comes down, and prematurely gets back up, but prematurely gets back down, right? It does it without hitting the top of his band or the bottom of his band. And then it kind of does the same thing for a while, pretty much the entire month of March. And then you see that there's a resistance here and then a support here. And essentially, and I also tweeted out that there's a slight bullish divergence. I tweeted out yesterday. That's a slight bullish divergence. And then we see that we gap with that gap up and the continuation move that we see this today, the oscillator is staying above this falling resistance as of today, where we didn't see that cross. We saw a little bit of move here, but because on that the last hour bullish run right here, because of this, you can see that oscillator continues to make a move to the upside instead of curling back down. This tells us that it is supporting the buyers. It's favoring the buyers going into tomorrow. And at the same time, it is not overbought. We got a little bit of room here. That means there's one more day energy store for the bulls. Should the bulls decided to utilize that and push it one more day, they really need to get up and fill this gap. If they can do that, there's a good chance that bulls can utilize this moving average, the midterm moving average, and surf it back up, and even potentially, even possibly, find a way to make new all-time highs. But keep in mind that we are in this volatile, choppy environment. If we see a 1% gap down or some shenanigan like that tomorrow morning, it wouldn't surprise me a bit. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck training tomorrow.